Imagine buying your dream property only to discover hidden costs that could have been avoided. This is why checking the tax roll is crucial. We are growthsense.com. We built a platform that allows investors to buy, sell, and invest in real estate properties of all kinds, in all shapes, and in all conditions. Property taxes can vary widely, impacting your budget significantly. Did you know that in 2023, New Jersey had a tax rate of 2.49%, while Hawaii's was just 0.28%? Understanding these variations helps you plan for ongoing costs. The average property tax rate in the U.S. was about 1.1% of a property's assessed value in 2023. Tax rolls can reveal if there are any tax liens or delinquencies, which could affect your ability to buy the property or increase your costs later on. Approximately 4% of residential properties in the U.S. had tax liens or were delinquent in their property taxes in 2023. This is a critical factor to investigate. The tax roll can show trends in property values, helping you gauge whether the investment is likely to appreciate over time. Between 2019 and 2023, property values increased by an average of 5.4% annually, but recent economic conditions have slowed this growth. Tax rolls also provide details on exemptions or special assessments that could either reduce or increase your tax liability. For example, around 20% of properties might have tax exemptions for senior citizens or veterans, which can significantly impact your financial planning. Beyond the purchase price, property taxes are a significant part of the total cost of ownership. Homeowners in high-tax areas like New York can pay upwards of $10,000 annually. Tax rolls allow for comparisons with similar properties in the area, providing a benchmark for your investment. Tools like Zillow use tax roll data to help buyers compare properties based on assessed values and tax bills, enhancing transparency. Ensuring that the legal description matches the property you're interested in is key to avoiding legal complications down the road. Title issues are responsible for delays in about 15% of real estate transactions. Checking the tax roll can help you avoid these issues. Some properties may have exemptions that reduce tax liability or special assessments that increase it. Approximately 20% of properties have some form of tax exemption. Tax rolls can reveal planned developments or zoning changes that might affect property value. Urban areas typically see about a 10% increase in property values following significant infrastructure improvements. Knowledge of a property's tax history can be a powerful tool in negotiations. Informed buyers can save up to 5% on purchase prices by leveraging tax information. Awareness of local tax regulations ensures compliance and helps avoid future legal issues. Non-compliance can lead to penalties ranging from fines to foreclosure. Identifying tax liens and delinquencies is a critical step when considering a property purchase because these issues can significantly affect the transaction and future ownership. Tax liens are legal claims by the government for unpaid property taxes, and they take precedence over other debts, including mortgages. If a property has a tax lien, it can complicate the buying process, potentially leading to delays or even foreclosure if the taxes remain unpaid. Tax delinquencies signal potential financial instability of the current owner, which might provide an opportunity for negotiation. Property owners behind on taxes may be more willing to sell at a reduced price to avoid further financial trouble. Track historical value changes through tax rolls to identify long-term trends and determine whether a property is likely to appreciate or depreciate. Gauge market health by examining tax rolls. Properties with rapidly increasing assessments may indicate a booming market. Identify emerging hotspots by noticing significant increases in property values in particular neighborhoods. Detect overvaluation or undervaluation by comparing assessed values with recent sales prices. Assess the impact of local developments on property values by looking at tax rolls. Understand tax assessment practices of different municipalities to anticipate future tax liabilities. Spot potential investment opportunities by identifying properties with recent drops in assessed value. Evaluate the fairness of assessments by comparing the assessed values of similar properties in the same area. Monitor economic indicators through tax rolls to predict future tax increases and manage long-term financial planning effectively. Don't let hidden costs surprise you. Check the tax roll and make informed decisions.